Oh no, my car broke down and the repair costs are way higher than I expected. I need cash right now. I need cash. I can't also wait for payday. And borrowing money takes forever. What do I do? Wait a minute. I've been saving on the Achieve app. I should have some money there. Wow. My DigiSave investment on the Achieve app gained some additional interest. I love this app. With the Achieve app, I can instantly have access to my emergency savings anywhere, anytime. I've been saving little by little, and now I don't have to stress at all. Download the Achieve app today and start building your emergency fund. It's the smartest way to stay prepared for life surprises.
It's beautiful, but how do we make it work?
I know how to make this happen. With the Growth feature on the Achieve by Petra app, we can invest towards this project.
They dreamed it. They planned it. They achieved it with Achieve by Petra.
It's beautiful, but how do we make it work?
I know how to make this happen. With the Growth feature on the Achieve by Petra app, we can invest towards this project.
They dreamed it. They planned it. They achieved it with Achieve by Petra.
Hi, my fellow investors. Let's make investments exciting this year. In fact, let's make it a challenge. Let's see if you can save and invest up to 100K by December. Open up the Achieve by Petra app, look for 100K with Richie, and join me as we try and invest up to 100K by December, because we are all building wealth and we are building it together.
Good afternoon, everyone, and you're warmly welcome to They're all you need to know about Plus Balance Fund, popularly known as Balance Growth. I'm your host, Joel Bill, and guys, we're going to have an amazing, insightful session right here on Achieve by Petra YouTube channel, streaming live on YouTube, on X, and also on Facebook. Guys, if you know anyone that you feel this is going to be interesting for them, why not tag them along? Send the link to them and let them join us here. Most importantly, thank you for taking your time to join us. Whether you're an existing investor or this is your first time hearing about Achieve by Petra, you are warmly welcome and we're excited to walk this journey with you. Okay, guys, before we start, you know the usual tradition. Let us know in the comment section where you are joining in from, where you're tuning in from today. So if you are Yao from Kaswa, let us know in the comment section. Okay. Okay. We have Michael from Suhum. Okay. Keep them coming. Keep them coming. Thank you so much for joining. We appreciate you. We have Joe from Ho. Joe from Ho. Okay. John Asel from Dansoman. Thank you so much for joining. Thank you so much for joining. All right. Okay. Guys, we are not doing this alone. As Mr. Emmanuel Eshun from Blackstar Advisors is going to be taking us through some really interesting insights about Plus Balance Fund. Most of us have been asking about it. We put out a link for some of you to ask questions, and we have seen the questions, and we hope that it will be addressed in this particular webinar. So stick with us, and let's have an amazing 1 hour. Okay, there are more people commenting. Okay, we have Emmanuel from UMAT Takwa, Gideon from Tema, Mina from Ablikuma. Okay, Raymond from Amasaman. Thank you all so much for joining. Okay, Emmanuel,
Hi, Joe,
you're
and
warmly welcome. You're warmly welcome.
thank you, everyone.
Yeah, it was
Thanks
so
so much.
nice the first time they decided that we should have Emmanuel back again to talk about Plus Balance Fund.
Well, I now have to start charging.
Most
Yeah,
definitely,
I'm
most
happy to
definitely.
be here.
Yes, yes,
Happy
yes.
to be here.
Yeah. Emmanuel, tell us a little bit about yourself before we head into the nitty gritties.
Okay, my name is Emmanuel Eshun. I'm one of the portfolio managers at Blackstar. We oversee pension funds and mutual funds. We do a bit of private wealth as well. So our daily job is making sure that we make money for clients, given the objectives and targets. So basically, pretty much that's the job we do on here. So happy to be here and to have this conversation, especially on an exciting fund like Plus Balance.
Amazing, amazing. Guys, at Achieve by Petra, our mission is to make investing simple, accessible, and understandable for everyone. So we encourage you to participate actively. If you have any further questions, just put it in the comment section. At the end of the webinar, we're going to try and address all those questions as well. Emmanuel, let's get started.
Let's get started.
Yes.
Once again, good evening to everyone. It's always amazing to have this conversation about investment, and we are happy that a lot of people are getting excited about investment, which is actually good, such that you're not picking information from just random people online, but using platforms like that, by Petra app, to get correct information about what is going on within the funds. So today we'll be discussing Plus Balance Fund, which is the global balance growth fund. And for that particular fund, the idea was quite simple, and the fund has gone through several phases. We came from a point where we were largely a fixed income fund, though the fund in its structure is a balance fund. We moved from that, and then we got into a point where the portfolio is actually properly balanced now. So we have a bit of equity both locally and internationally. And then on the fixed income side, we have some local and also international exposures. The other exciting things that happen within the fund, which you'll see as we move forward. And the main thing is that the fund was supposed to be a bit different from the traditional funds that we see in the markets, just to give people an extra form of diversification on the market.
Yeah.
We also say, and if you've spoken to anyone, Plus Balance is a long-term fund. And so if you're looking at it as let me go in and come out, then you may be burnt at certain point in time because the market may not be favorable at the point where you want to exit. So I'll structure this presentation in two ways. We'll look at the fund in itself, what we invest in, which was one of the main questions that we received. We'll look at what the fund is made up of, what the fund invested currently, what does the fund's performance look like, what are the historical performances of the fund, which was also one of the key things that people kept asking about. So we'll go through all that. Then we'll go into why the fund is performing the way it is and why do we see a lot of volatility. When I say volatility, we are talking about today is the price is 2 cedis, the next day is 1 cedi 2 pesos, the next day is 2 cedis 30 pesos. So that volatility is what we are going to be looking at and why we see those volatilities happening within the fund and why it is necessary or why we even keep saying that you should look at it more of a long-term fund rather than a short-term position to be taken. So I'm excited about this presentation. So we'll just dive right into it. So as you all know, Plus Balance Fund focuses on long-term growth by investing in a diversified range of fixed income and then equity positions. Also considering some REITs when we have the opportunity, just structured for a long-term growth of your money. So internally, we call it the salad portfolio. Salad because it has any type of investment that you're looking for. Short-term fixed income, we have in there. Long-term fixed income, we have it in there. We have equity positions, both locally and internationally. Fixed income positions, both locally and internationally. So the whole portfolio is a blend of unique assets that have come together, and you realize that it is quite diversified. That's why we call it the salad. So you'd find securities and positions that are not positively correlated. Hence, one goes up, the other is coming down, and then they net off. But overall, the long-term growth potential is quite high. So that is the fund that we are invested in. So those who have been quite skeptical about understanding what the fund really does, that's the whole idea of the fund. So we are telling you that we are doing a bit of equity, we are doing a bit of fixed income, both on the global market. Global market includes the US, includes Asia, includes anywhere, even in Ghana, that's also part of the global market. So we are looking across the whole world and seeing where opportunities are, and that's what we pick up. So in terms of what the fund offers, one, it gives you global diversification. So you're not looking at Ghana instruments alone, but you're also getting exposure to some of the big names that you know. So like you use an Apple phone, you have some exposure to Apple there. You use Microsoft to use Windows. You have some exposure to Microsoft on there. And several others. If you drive a Tesla car, if you're rich and you drive a Tesla car, you have some exposure to Tesla. And locally too, we have some other equities. So you find MTN in there, you find GCB in there, you find Casapreco in there, and some other equity positions that we have within the fund. So realize that, and even on the fixed income side, you find that we have some government bonds in there, we have some treasury bills in there, we have some corporate bonds and corporate short-term instruments also in there. So realize it's a whole blend of assets in there. So we give you that global diversification. The other side is also currency diversification, where we see that because you're investing in external markets, you're getting that exposure to currency. So you have some USD exposure by investing in the fund as well. And that's also quite something that we should also take note of, because by and by it has influence on the performance of the fund. In terms of when CD is depreciating, the fund may be benefiting. And then when CD is appreciating, then the fund may be losing because it has some assets in there. The other thing is long-term growth alignment. So long-term growth meaning that there may be short-term volatility, but the overall return profile, or should be looking at a very long-term sort of investment period. So you're not looking at those whose long-term is 1 year, it probably won't work for you. Long-term, you should be looking at 3 years and over. That would be a good gauge of long-term. It's only in Ghana that people's long-term starts from 3 years, but in the international market, long-term is really 10 years and above, which is quite a substantial period for you to make some long-term gains on the equity market. Then the fund is ideal for investment planning. So you find those who have started saving for their retirement because they know that maybe SNIT is not going to be enough tier 2 is not going to be enough. Even if they started tier 3, maybe it's not going to enough because of the life that they want to live. So they want to also personally start setting money aside for retirement. This is the fund for you, especially for the young ones amongst us. I'm also quite young. You want to start early so that you have a very long-term horizon for you to invest. And that long-term horizon also gives you the opportunity to take advantage of good potentials that exist on the market. And going into the slides, we'll take a look at some of where growth has been. We'll look at S&P, we'll look at NASDAQ, and see that there's been a lot of growth in those markets over a long-term period, which is why we keep saying that the fund is a long-term aligned portfolio. And so as you want to come in, you should have that same idea or that same mindset in coming into the fund. The other is family trust and financial legacy. So those who say that next of kin should relax, they will sort them out. This is you started saving for your next of kin. So for you are putting your money in plus balance for that goal. So family trust or financial legacy. For those of you who say next of kin, you should work hard. Now and there, this you're talking the money right now. You're looking at something quite different, right? But if you are thinking that the next of kin should have something set aside for them, then plus balance will be ideal for you. Then the other is buying a second house. Even buying the first house is quite essential for this as well. So if you're thinking about building a house, maybe you just started working at 25 and you want to build a house in the next 10 years. So you start saving towards that. You want to consider long-term investments like plus balance fund or global balance growth for that sort of goal, because it gives you the chance to grow your wealth aggressively over that long-term period. So it's very important to look at that as well. In terms of fund features, the fund is worth 164 million. The price, as we can see there, 2 CD 76 pesos. It's a balanced fund. Valuation methodology means that all the securities are marked to market. So we have the actual market values of the securities in there, such that if today you see a price of 7 cities and 2 CD 76 pesos and you want to withdraw, we are giving you something close to that. It is not too different from where you should be. So it's not like you're seeing a balance of 300 cities today, you want to withdraw, we say that it's worth 200 cities. No, all the securities are marked to market. So what you see is really what you get. Then the entry exit loads. So we have exit loads, which is tiered. So if you are going out, because you're trying to keep more people in over a long term, if you're coming out after 1 year of investment, you'll be charged at 3%. If you're coming out after 2 years, you pay a 2% penalty. And if you are coming in after 3 years, you'd have to pay a 1% penalty. Anything after that, which is that you actually invested for more than 3 years, you would not be paying any penalty, which is the idea. So we hope that you're able to stick and stay in the fund. Even if there were no fees, we hope that you're able to stick and stay with the fund and ride it out the ways that we are going to be talking about going further into this conversation. Management fee per annum or per year is 2.5% of the assets under management. And then withdrawal redemption window up to 72 hours. We say up to 72 hours doesn't mean that you get your money after 72 hours. It means that you can get it even a day, in a daytime, which is 24 hours, or within a day. So those are some of the, but it may take more than 72 hours for you to get your money. The current custodian of the fund, or the holder of the assets of the fund, is currently Stanbic Bank. So Stanbic Bank holds all the assets of the fund. None of the assets are seated on either Achieve by Petra's books or Black Star's books. All of the assets are seated with Stanbic Bank. Then the current auditor of the fund is also BNA Chartered Accountants, who are the external auditors of the fund. So in terms of fund features, those are some of the things that you'd want to pay attention to. The other thing, and one of the things that people have constantly asked about is, what does the fund look like? What does the fund invest in? So we took a look at what the asset allocation is like. So in terms of local fixed income positions, we had about 44%. In terms of global equities, we have about 37%, almost 38%. Cash of 4.7%, local equities and 13.07%. So in terms of assets blend, that is the unique asset blend of the fund. Zooming in into what the top 10 assets look like. So you can see that we have our biggest position is a 30-day FD, which we use largely as cash build-up for some large investment that we are trying to do. The next thing is MTN Ghana. So as I mentioned, there's a blend of local equities, there's a blend of foreign equities, a blend of local fixed income, and then a blend of offshore fixed income. So all that comes together. So you can see MTN there, you can see Treasury bills, you can see Palantir, which is a US company. So that's also part of the top 10 holdings. You can see TSMC there, that's also a company, a Taiwanese company, the main manufacturers of chips. So NVIDIA will design the chips and TSMC will print the chips. The full name is Taiwan Semiconductor Company, Manufacturing Company. So just so you know. Then we have GCB Bank as well. So you can see from the top 10 that it's a whole blend. There's Ghana there. We are not biased to any country where we think that there's potential for growth. That's where we invest your monies or shareholders' monies. You can see there are short-term instruments in the 364-day, 1-day FDs, and all that. So there's a whole blend, as you can see from the allocation. Then we go further in terms of sector allocations, we favor a lot of information technology and technology in general because we think that that's where growth is from. So you realize companies like Microsoft, Meta, all those fall under information technology. We favor them because really, if you look at where we are now in the AI space, they are the ones taking advantage of those opportunities that we are seeing in the AI space. And so that's where growth potentially is going to come from. So you can see that the others comprise all the short-term positions that we have, the FDs and repos and all that we have in the fund. But the biggest in terms of sector is information tech, where we have 21.8% of the fund. Then we have some government exposure, i.e., the government bonds that we have, the government treasury bills that we have, and all that comes together to form the 70%. The financial, this is where GCB will fall under, where we have exposure to GCB Bank. It's a financial institution. Then you have consumer discretionary, where Amazon will fall. We have industrial, which is where TSLC, for example, will fall. Then we have material, where some of the other positions that we hold would also fall. Then we just look at some of the mix of assets that we have in there. So TSMC, NVIDIA, Google, Casapreco, Amazon, Government of Ghana with a nice Ghana flag on there, MTN, Microsoft, CrowdStrike. Those are some of the key positions that we have in the fund. So for those who have been quite concerned about what the asset base is like, this is really what it looks like. We come from the point where we've seen the asset allocation, the top 10. Now they're in a sector blend as well. We've seen that. As well. What has that also meant in terms of return? So the fund started somewhere in 2019. And if you look at it, the benchmark against the fund itself, the fund has overall over a long time period beat its benchmark. So the fund has been positioned for that type of growth. It is worth noting that the fund over the first 4 years runs mostly like a fixed income fund. In 2023, we got permission to rebalance the fund from the board and from shareholders to relook at the investment objective of the fund. And we thought that it was important we bring global assets down to Ghanaians, similar to what we did for global tech. So giving ourselves, global tech is pure equity, whilst Plus Balance has a wide range of assets. So as I said earlier, the salad, fixed income and everything in there.
Yes.
Just give us that opportunity for those who like potential high return, but are not too good with risk. This is where you want to be, because you don't want too much of the high side risk of global tech, but you also want some good returns. Then Plus Balance or Balance Group will be the ideal fund for you. So as you can see, the fund has done quite well. So rebalanced in 2023, and then we've seen that growth go on since then.
Yeah.
In terms of looking at year-on-year return, so if you go back a bit, you realize that in 2021, 2022, 2023, the returns were quite similar to what we were seeing on the fixed income assets, 16, 8.9, 15.22. Then in 2024, when we had fully rebalanced, the fund did 38% in terms of return. Last year was quite an amazing year. Amazing because we saw for the first time over 15 years, or since the redenomination of our currency, where CD actually appreciated in a full year. So last year, CD appreciated about 40%, and we saw that translate into the fund. Last year, I realized that the fund actually had a chunk of US assets, and then you know that if you hold $10 now, or if you bought $10, maybe last year you bought it at 15, and you would have paid 150 cedis. If CD dollar was 15 cedis, you would have paid $150, 150 cedis for $15.
Yeah.
Now, at the end of the year, dollar was around 10. It means that $150, that $10 that you were holding now is worth 100 cedis, right? That's the same influence that we saw in the fund. So the fund was holding assets at a certain price, or you're holding USD assets at a certain price. And then when CD appreciated against the dollar, we saw that translated into the performance. We will go in further slides, we'll look at the dollar return of the fund in that particular instance, where we realized that it was much higher, around 48%, and you'd be surprised. That was the dollar return, but because of the currency move, that affected the sort of return that we turned out in 2025. So we thought it was an exciting time, even though you were seeing a dip in terms of your dollar sort of value, you were still preserved in terms of that.
Yeah.
Reason why this is also important is because locally we spend a lot on. We think we are not directly exposed to US, but we are, because everything that we buy is US denominated. You buy a phone today, maybe you buy a Samsung or you buy an Apple phone. That phone is not made in Ghana; it's made in the US. If you import it, you would have paid a certain FX conversion rate for that position or for that phone that you're buying. So indirectly, there's always that dollar exposure. So it's also important that even as we look at our investments, we look at also currency diversifying so that it becomes, you build a stronger portfolio. Hence why Plus Balance is actually ideal, because in this sense, it has some USD and has some CD positions. So wherever the swing goes, it benefits from that. So pretty much what we've seen when we've gone through the fund, as I mentioned, my presentation will look at two things. The fund side, I hope I've been able to answer most of the questions that came in relating directly to the fund. I think there was a question on which REIT we look at. So currently there's no REIT in the fund, but we have the opportunity to do REIT in the fund. The REITs that we've seen currently are not as exciting as we want them. And so once we find an opportunity, we'll be quick to go. I mean, we've taken the fund, but I want to, this side is quite important to me because it helps us understand and appreciate why the fund does what it does, and appreciates the reason why we keep saying that you should look at it on a long-term basis. If not, you stand a chance of being burnt. So we'll look briefly at the lines a bit plenty, but try to follow. So I made the colors a bit exciting. I know that's green and light blue. For the ladies who are saying you guys don't know colors, this is green and the light blue. So, and then there's gray at the bottom. So the green one is the Nasdaq 100, tracking the 100 of the biggest technology companies in the US. SPX, which is the blue line, is tracking the S&P 500, which is 500 of the biggest companies in the US. The VIX, which is the gray line, is a measure of fear on the market or measure of volatility on the market. Ideally, you'll find that if you look closely, you realize that so as the VIX goes up, it means that there's fear increasing on the market. Hence, people will want to remain a bit conservative and leave the equity market. So there'll be a wide sell-off essentially. So anytime that we see a swing in the VIX, it means that a lot of people fear what is happening on the market. And you realize the biggest jumps that we've seen. If you take a look at, let me just get a pointer to make it easier for us to follow. Okay. Why is it yellow? Okay, 1 second. Let me choose red. Okay. So if you look at this was around when Trump announced the tariffs. So you realize that market thought that this was going to have a big influence on the companies, on US companies essentially. And we see that even S&P dipped even further than Nasdaq. So it means that there was a lot of sell-off on the market. So once fear goes up, it means that people typically want to shift from the equity market and enter more conservative investments like the fixed income space. Then we see another swing here, which is just this year, where the US-Iran war started, and we saw a big jump. There's also a lot of fear on the market. People running away from the equity market to find consolation elsewhere. There have been a few other instances. So when the Russian-Ukraine war also started in 2022, early 2022, we saw a lot of volatility, and that you realize that there are a lot of peaks here because that period was characterized by we were just coming from the COVID-19, and this war also broke out. So there was a lot of uncertainty on the market. For those of us who have been following the market for a long time, oil prices also hit 20 levels, and even recently from the Ukraine war, the tariff announcement, and then the US-Iran war, where the Strait of Hormuz was closed, we realized that oil prices have still gone up again. And even those who buy fuel, you realize that fuel came down to 11 and has gone back to 17 and 15 levels respectively for diesel and then petrol. This is not because our currency has depreciated, but because oil prices on the market have gone up to 100 levels again after falling back to 70. So all these things have an influence. For me, this particular slide was supposed to show up one thing. When there's a lot of volatility on them, or when there's a lot of fear on the market, let's take a look at this. You realize that there's a sell-off here. There was a sell-off here. So the equity market felt the dip. So once there's a lot of fear, people sell off and then the market dips. You realize that right after, market starts to recover again. So we see the recovery going up, going up. Then we see another period here where we saw there was also a lot of risk. And you can see clearly that the market also dipped again because fear heightened. Then it started climbing back up again. We see another one here and the influence here. There was a lot of fear. Market dipped, and then started to climb again. You can see that there's a very straight line. If you can, once there's up, also a down on the equity markets. Then the biggest one, tariffs announced, and the market dips. There was about a 23% dip, or 19% dip on here, because there was a lot of fear on here. Right after market recovered, people absorbed the whole news about the tariffs, because if you think about it, for companies that make a lot of their revenue from the US, imposing tariffs on imports in the US doesn't really matter to them because a lot of their revenue is internally driven or internally generated. So the market assimilated that information and thought that, why are we even selling when we should actually be buying more? Then market started to recover again. Then this year, we saw another opportunity where the US-Iran war started, a lot of fear on the market, and then there was also a dip, and market recovered after assimilating the news and thinking, this will be like the Russian-Ukraine war where they're always fighting, but we will find better ways to resolve our issues. So if it's supply chain, let's find other ways to route oil rather than use the Strait of Hormuz. So those are some of the things. Market understands the dynamics and says that, okay, let me assimilate and find the market shouldn't be selling on this much, and then we go back to where we were before. The other thing I want us to look at is that you realize that if you had started here, if you had invested in the US market here, you had made around here, you had made return, and then you'd have sold off in 2022, you'd have made some gains. Now you are here, and you say you want to sell off. At this point, you are not seeing that there's a potential increase here, right? But because you don't have a long term, this is for those who come into plus balance and don't have a long term view. After 1 year, you say that you want to get out, but you're getting out and you're around here, so you'd have lost money. But if you if you have a long term view, if you draw a straight line between here and here, you realize that it's a straight line upwards, not downward. It means that over a long term, you make money on the equity market, which is quite important for us to understand. So taking those short-term positions in plus balance would be a very big mistake. And so we should look at it more on the long term. I would see these opportunities as times to buy. Imagine, and I think overall we seem to imagine that investment is very outside of our jurisdiction. So if today you're going to you sell bags, and today you go to the market and you're buying a bag for 100 cedis and you sell it for 150. If today you go to the market and then you're able to buy, you see that the price is now 75 cedis. You probably buy more bags because you make a lot of return buying at 75 cedis. That's how we need to think about investment. So at the time where the price drops, if you know that what you're buying is quality or what you're buying is quite good, you want to stock up on it. That's how we should actually see investment. So I invested in plus balance, and you know the type of assets that are in there, and that information actually very available on our website. You can find the fact sheets which we
Mm.
publish every month. You can see all the information, what we hold in the fund. So if you think that plasma is a good, the holdings are good, the securities in there are good, why is it that when the fund drops, you think about selling rather than buying more? Those are some of the things that we should be looking at aggressively. So not looking at the fund as a sell position, but a buy when the market dips, which is you taking positions when these things happen. So imagine you buy here, market went up, and you're able to catch this and you buy some. Fear heightens, you're able to buy some. Fear heightens, you buy some here. Fear heightens, you buy some here. Fear heightens, you buy some here. You can't always catch it. Hence why it's also important to have that recurring contribution that Achieve by
Yeah.
Petra had, that you make those monthly contributions, constant contributions, which helps you to, if not nothing at all, maybe at the end of the month you may catch some of the dips,
Mm.
which in this month we are getting close to the end of the month, and a lot of us have been paid for those who work in who work at 9 to 5. A
Yeah.
lot of us have been paid, and the US market is down. The US market is down, and so it will give you an opportunity to actually go into these markets and then buy some more. So this is was just to draw your minds to the fact that there's always opportunity in times where there's a lot of fear. So
Yeah.
my boss always says that
Mm.
be greedy when everybody is fearful, and be fearful when everybody
Yeah.
is greedy.
Yeah.
That's the best thing, because in this sense, everybody is fearful, but
Mm.
you become greedy and you buy more. In this
Yeah.
sense, people are quite okay. They are greedy, but you are fearful and would want to be patient to catch a certain dip on the market.
Mm.
Again, not to say that you should always wait and catch a dip, because
Yeah.
you may never know when the dip will come. So
Yeah.
that regular investment also helps you to
Yeah.
catch those sort of dips without
Yeah.
even realizing that you were catching them.
Yeah.
So regular
Yeah.
investment also helps. Then we go into just zooming it out and seeing what this year has meant. Now, the
Mm.
other one from 2021, we are just looking at 2024, actually 2025 and 2026. So this was the tariff announcement. We saw the dip here. And then this was the closure of the Straits of Hormuz. Also, we saw the dip here. So these offer you a rare occasion where you can actually buy the fund and then make some level of return. So realize that once the dip happens, we go back up. A dip
Yeah.
happens, and then we go back up again. So
Yeah.
those are some of the exciting things. Rather than see them as exit points, you should actually see them as buy opportunities
Yeah.
or chance for you to go in and then
Yeah.
to make more return. So
I
that is
think
just mhm.
Yeah, I think that's where the saying that comes. It's not about time in the market; it's about time in the
Exactly.
market, right?
Time in the
So if you
market.
are investing consistently, you'll be able to catch some of these dips and
Exactly.
make
You
use of
make
it.
some more money.
Amazing,
Exactly.
amazing, amazing.
Exactly. So those are some of
Guys,
the things we like everyone
sorry,
to be excited
sorry,
about. Yeah.
sorry about that, Emmanuel. So let me find out from our listeners, guys. Emmanuel has been going on about the fun performance, the dips, the different climates that makes it go up or go down. If you're following, let us know in the comment section that you're following. If you have any questions, please feel free to put it in the comment section, and we'll do justice to it at the end. Emmanuel, please over to you.
Yeah. I mean, I think largely I actually want a lot more questions so that we
Yeah,
can have the conversation. So I'll just run through a bit of it.
amazing.
So plus balance performance. So just to also give us a picture, the fund's performance is quite similar to what we've seen on the global markets. We can see
Mm,
that the dip we see here in the S&P and then the Nasdaq 100 is really what we also saw here. So this is March 26. This is
yeah,
also March 26. If you realize, it's also March 26. So because we are invested in the US market, which is S&P and then the Nasdaq, it means that those markets influence the performance of the fund. Hence, when you see these opportunities, I think it's a good time to say that, okay, I'm going to put my money in the fund. I'm going to get more of, because if you are buying the fund at 2 cities and you have 100 cities, it means that you're getting 50 shares. But if the
yeah,
fund dips to 80%, you get more shares because the price has come down. And if you have more shares, that's a bigger base for you. And as the price climbs back up, you make a higher return. So those are some of the things so don't look at this as a point to run away. And we'll look at reason why people lose money investing in funds like Global Tech, investing in funds like Balanced Growth. Why people lose money is because of certain things that they do when they're invested. And we'll look at that also in the last slide. So global plus balance growth at the now it's around 16.82% in terms of year-to-date return. Looking at this particular slide was to give us a picture of what the currency effect is also. So let's pay attention to this. Let me just draw a line
Yep.
here. My lines are not straight. I wear glasses, so my eyes are
That's
yeah.
fine.
So I want us to pay attention to this point. So you can see that around this time, the fund started to go up in terms of, so there's a black line which is the CD return of the fund, and there's a gold line which is the dollar return of the fund, and then there's also currency. This is from last year to this year, and so as you can see, there's a unique thing we see here. As currency is improving, right, the CD return of the fund is increasing because the fund has some other assets that are also CD denominated. Then the dollar return also of the fund also improves because of the CD component. What I'm trying to drive at here is that the currency also has an influence on the return. So even as you look at the underlying asset doing well or not doing well, the other influence on the fund is also the currency bit. So in entering plus balance fund, you're not taking on only the assets risk, but you're taking on currency risk as well. So those are some of the things that we also have to constantly think about as we go into the fund and invest in the fund. That we are not just taking the underlying assets. Okay, Apple cost so my plus balance should also go up. Maybe the time that Apple went up and then the fund was supposed to go up, currency also went the other way, and so the total effect then becomes maybe a drop. So let's say Apple goes up by 5%, currency also goes down by 10%. Net, you are down 5%. So look, those are some of the dynamics that we also need to appreciate as we put our money in the fund and we invest in the fund. The currency is also a large part of the risk and reward that we make. So it's not just a risk, but there's also a reward. If currency depreciates, because the fund has dollar assets, it makes certain gains. But the other side is also true because it has CD positions as well. When CD depreciates, those assets also depreciate, which is also quite counterintuitive. But those are some of the dynamics that we are excited about within this fund that make this fund quite unique for investors who are keenly looking at it. The reason why we favor these tech stocks is for the obvious, for all of us, those who are using ChatGPT, using Anthropic. Even we had a question on SpaceX and everything. Those are some of the exciting things that are happening in the world right now. We have transitioned we come from a period where we were so go back to 2003. That's when ChatGPT came. ChatGPT came, and a lot of us were on ChatGPT. Instead of using Google, we were on ChatGPT. We got into the point where the AI actually does the work for us rather than type it. So we find people coding with they call it vibe coding. So people are vibe coding. People are doing exciting things with AI. We've gotten to the point where we call agentic AI, where AI is actually working for you. We are getting to another portion of it, which is where AI is actually integrated into robots, and then that side will be the physical AI, where AI actually is embedded into physical products or physical assets, and they actually translate that into work. So we find now AI cannot build a road for you, but when we get to the physical AI side, you find the robots building the roads, and those are some of the things that we are quite excited about. Hence why we have some of these unique positions within Plus Balance. So reason why we remain bullish, just a random pick of some of the securities that we are invested in. And the unique thing here is that you realize that a lot of them, if you're investing in any company, really, you're expecting that they do well. So their revenue numbers are good. For most of the companies on here, you can see that if it's green, it means that they beat their earnings estimates, or they beat what people thought they were going to do in the particular quarter. Across Palantir, you see they beat their earnings. Alphabet, which is the parent company for Google, beat earnings. Meta beat earnings. Nvidia beat earnings. CrowdStrike beat earnings. Apple beat earnings. If you look at other ones, Microsoft beat earnings. A lot of the companies, even though they are spending so much on AI investments, they are still beating earnings, meaning that their revenues still remain strong and they are poised for the future. You only put money where you think that there's growth. So as they spend more on AI, it means that their view on AI is that it's going to cause a lot of growth, or their view on technologies that is going to cause a lot of growth. It's going to be where there'll be a lot of growth. So as these companies continue to invest in AI, we believe that there's still a lot of growth in these markets, and why we keep looking at them. As I said, we're going to look at a few mistakes that some of us make when we are going to invest in balanced growth or plus balance fund, and mistakes we really should avoid as investors. The first is putting all your money in plus balance growth or plus balance. That's the first mistake. Somebody will take their children's school fees, which they are paying in 2 months, and then they can put in plus balance, thinking that hey, tomorrow I'll cash out. It's not bet. Definitely
Yeah.
doesn't like that. So you should avoid one putting all your money in plus balance, especially when that money is not suited for the structure that plus balance runs, which is long-term growth. So we need to avoid those type of instances. Make sure that whatever you're investing, whatever the money that you're investing is for a long-term purpose and not for a short-term purpose.
Yeah.
So your rent will not be ideal for plus balance. Maybe your children's school fees, your own school fees in the short term will not be ideal. But if you are saving for your children's school fees, maybe your children are in JHS now, and you want to start saving for their university education. Maybe you want them to go to Harvard. You want to start saving for them. Then it's a long-term growth. Then plus balance works for you. But if you are saving for their school fees next term, now and then, maybe you should look at another product, not plus balance or balance growth. So putting your money in balance growth will not be an ideal thing. Ideally, what you should actually do is to make sure that you build an emergency portfolio where you can fall back on if you have emergency situations and will not have to take the money from balance growth or plus balance. So you build the emergency portfolio, maybe using DigiSave, and then once you need money, and then you start building your balance growth. So in times where you are really pressed for money and then you need money, you actually tap into DigiSave and not balance growth or plus balance. The other mistake we make is chasing quick returns. And for most of us, I know for most of us are quite keen about the investment space. So you may have seen the circular that the SEC posted about schemes that are not registered and are promising high returns and all that. One mistake that you make is chasing high returns. So somebody tells you that, plus balance, I went inside yesterday, I put 1,000 cedis inside. I've made 300 cedis. And so, Charlie, you need to go and put your money inside. That's really chasing high return. But really, maybe the person has been in longer than what they told you. And you didn't even care to ask how long was that for. So you need to stop chasing quick return. Chasing quick return is the biggest thing that has caused a lot of scams in Ghana. So somebody tells you that they have a 10,000 brand, which remember 10,000, 10,500. They say, then you are on red. Then you're going to but those are quick returns they are red flags for you. They are really red flags to say that, Charlie, get out of here, because there's no investment that will promise you a quick return. No. There's no investment in this without promising you a quick return.
If it's too good to be true, it is too good to be true.
Yeah, if it's too good to be true, just get away from there. The other thing is investing without understanding risk. So you are going to invest and you don't even appreciate the type of risk in the assets that you're going to invest in, which is also, in fact, taking that risk is very risky. So you should avoid those instances. You should look at investing after you've properly understood the type of investment that you have in there. Never enter into an investment that you don't understand. Hence why, even on our website, we try, even on our Achieve by Petra, we try to provide as much information as we can, just to give you a good understanding of the fund before you come in. This fund is a long-term fund. Understand that it's a long-term fund, such that if you come in 1 month, you put 1,000 and it becomes 950. You understand that this is the risk that I've taken for that period, and I'm actually looking at it over a long-term period. So you are not really worried when you see those instances. We actually get out of investments when we don't understand the nature and the characteristics of those investments, and that poses a risk to us. Because think about it, you put your son's school fees in there. The time you have to pay, you have lost money on it. That's a risk. That's a risk that you took. So at that point, you are not going to get back the same money that you would have been getting out something smaller than what you put in, because you didn't understand the type of product that you are going to invest in. Had you put it in DigiSave, you'd have been all right, because that doesn't go down, right? So those are some of the things that we need to understand and appreciate. The last thing is also panic selling. Selling, that stems really from investing without understanding. So investing without understanding, because if you don't understand the investment, then at every point in time, once you see that the price has dropped 1 CD per, your 1,000 CDs drops by 1 CD, and then you go on the achieve a better, click withdraw, withdraw, withdraw.
Yeah.
And some people would tap it 10 times because they want their money quickly. So it's very important that you understand the type of product that you are invested in. That
Yeah.
avoids those periods of panic sell. And for me, the panic sell is quite exciting because you get bent, you burn yourself. Imagine you bought on here. In fact, let me use the plus balance chart. You bought plus balance here, and then it drops to this side and say, hey, and this side maybe you would have lost just 2 C's. You say, hey, this is cannot go for more. Then you come and
Yeah.
sell. Meanwhile, just a month, barely a month after, the thing goes up to about 6%. Right? Those are some of the period. Those are some of the periods that we miss by panic selling. So the thing could have gone up. Not to say that it could have also gone down, but if you
True.
understand that investment, you know and appreciate that this is how it is structured. And so if I have a long-term view, and again, long-term view doesn't mean that you typically have the right asset. Let's say you go and buy, maybe for the want of a better example, let's say you bought Talo, for example, right? Talo has been constant. The price has been constant for a long time. Even after 5 years, the price is still the same, right? Not to say that if you buy whatever product over a long time, you should make return, but you have to understand that you have to buy the right product or the product that is doing the right things. That is also quite keen. If you buy the right product over a long term, it should generate you some good return, some good returns at the end of your investment period. And so, yes, one, putting all your money in balanced growth. Two, chasing quick return. Investing without understanding risk and the actual product that you're investing in. The last one is panic selling. Panic selling when you think that markets have dipped. When really they offer you an opportunity to buy some more at exciting prices or very good prices. So these were some of the questions that we've got. Is the principal investor going to be compounded by the profits return percentage? This was quite.
Yes.
I didn't get too much, but if I understand it, it means the fund is a mutual fund. Hence, once you come in, you get some number of shares. So as the price of the fund goes up, that is where you are making your returns from. So at the point where you want to sell or you want to exit, if you sell off, if maybe you bought at 1 CD and you're selling off against 2 CDs, it means that for you've made 100% return because 1 to 2 is 100% return. So you'll have made that 100% return and then you go out of the product. So that's how it works. So really, it is also, in a way, it is also compounding. In a way, it is also compounding. The other question was, what investment product do you invest our funds in? We looked at it up there. Local fixed income, global fixed income, global equities, local equities, and we need to find opportunities. Under that, we have MTN, we have GCB, we have Casaprec, we have Palantir, we have Microsoft, we have Nvidia, we have Tesla, we have Apple, and several other products, several other equities in there. On the fixed income side, we have some fixed deposits, we have some repos, we have some government of Ghana bonds, we have some treasury bills, we have some corporate bonds also, and corporate short-term instruments also in there. So that is the universe of assets that we are invested in. Then what is the percentage invested in each instrument? So we looked at the top 10 holdings. So we looked at the top 10 holdings. For some MTN, we have our 9.14%, Palantir 4.5%, TSMC 3%, GCB 2.3%. So each of the securities has their own weight. We can't look at all of it because it's a lot. It's not just a few securities. It's a lot of securities in there. So we can't look at that all together. But that is some of the positions that we are invested in. Then what type of real estate investments? Real estate is included in the fund. So how we do real estate is through real estate investment trust schemes. So these are pool of funds as well. So we don't directly invest. We don't go and buy land. No, we are not allowed to do that. So we don't directly buy land at Dowenya or something. No, we do. If we have to, we do it through a REIT, real estate investment trust schemes. So locally, there are a few that we are currently scouting, and internationally too, we are looking at some of them as well. But we don't invest in them directly. I think that was the main idea for this question. Then, what is the average return over the past years? We went through that as well, looking at some of the returns that we've seen over the years. So 2021, 16%, 2022, 8.9%, 2023, 15%, 2024, 38%, 2025 negative 0.13% because of currency. And so those are some of the returns that the fund has posted over the past few years. I'll stop here. Hey, there's only 10 minutes left. Thank you all so much. And I've been able to answer most of your questions. And I'll be excited to have more questions come up. Thanks. Joe, over to you.
Amazing. Amazing. Thank you so much, Mano. Thank you for that breakdown. We have a few questions from the comment section, so I'll be bringing them up.
Yeah.
For some of them, we've answered. Marketing officers answered a couple, but
Okay.
okay, let's bring this one from Cornelius. Cornelius is saying that he has learned a lot today because there has been dips on global tech and he has been in a panic mood. Okay, amazing. I think you explained that similarly when we did the
Yeah.
global tech webinar. So Cornelius, it's a long-term fund, so do think long-term. All right. Okay, amazing. Let's take this from. Okay, someone's asking on year-on-year projection for say the next 5 years. Is that
Wow.
something that
I can share a view, but not
Okay.
necessarily the actual numbers. So I'll take us back a bit. If you look at, let's take Nvidia as a classic example. Nvidia for the longest time had their graphic chips, and I remember back in uni, if you see somebody with a PC that has the Nvidia logo, you know that
Yeah.
this guy is using a killer PC. They've had
Definitely.
those chips and had even chips that were quite impressive, and they were way ahead of the market. But until there was a breakthrough in ChatGPT in 2020, late 2022 and early 2023, Nvidia's stock price was quite flat. Right. Once that came out, the fund just the security just ballooned and price just went up. They went to 1,200. They went to 6 trillion. Right. Market value. It's in the current dispensation we are. It is very hard to pick a certain return profile for assets because markets have become so volatile. And what we are seeing now is that even now, the global equity markets are very interlocked. So you hear that SK Hynix in South Korea has dipped, has returned, has posted earnings, and they've missed earnings. Then somebody in US, maybe Micron in the US, whose business is quite similar to SK Hynix, is dropping, but they've not even announced earnings. Where I'm trying to drive at is that the markets are so interconnected now that one information from one side just affects the entire global market. So assets are now very positively correlated now, even in the fixed income space. So now even fixed income and equities, which ideally should be negatively correlated, are actually a bit positively correlated now. So in terms of predicting, sorry, it's very hard to say, but to give you a picture of what we are thinking about, we think that there's a lot of growth going to come from one, artificial intelligence, two, robotics, three, self-driving, four, healthcare. Healthcare because of the things that we are seeing in AI, they are translating all that into finding better ways to cure diseases. So you find gene mutations, you find people trying to cure cancer, people trying to cure sickle cell. Again, from the type of applied knowledge from AI. So all those things are shaping into figure out how to solve real life problems. So not just you going to say, ChatGPT, type an email for me, but those things that AI has been able to gather, the data are all forming part of how we improve our individual lives as human beings as well. The other side is also the main basis for AI, or what AI is actually built on. One is data centers, the other is energy. And now we find that energy, if light goes off right now, no matter what, if you are Microsoft, your PC will go off. Your PC cannot stay on forever. So once there's no power, everything else is just unnecessary. So there's a lot of investment going into energy, finding better ways to figure out where we can find very renewable forms of energy, not depending on oil, finding solar and all that, nuclear energy, wind energy, all that. They are trying to find more sustainable ways to figure out where we can tap into energy. Data centers are also another. Cyber security is also one of the growing
Yeah.
sectors where now you won't know, even if you see a picture, you won't even know whether it's AI generated or is
Mm.
human generated, right? And AI can also hack, because if you can build a code, you can build a code with AI. AI can also hack. So you have to find better ways to
Yeah.
protect yourself in the cyberspace. So cybersecurity may be one of the things that will spring out
Mm.
of AI conversations. And so that's where we think that the world is going. Hence why we are positioning the fund to have some of these key names. Once we
Right.
have these key names, as they grow, we are also growing with them. Or as
Yeah.
they make 100% return, whatever their revenue numbers are, they are blowing it. It also translates into the sort of return that we see within the fund.
Mm.
So in terms of numbers, I may not be able to put
Yeah.
exact numbers to it, but that's where
Mm.
our minds are. That's where we are also thinking in terms of knowledge and all that. Yeah, going forward.
Interesting. Okay, thank you for that. Let's take this from X. Mike J says, "What's the amount you'd advise someone earning, say, 8,000 Ghana cedis to invest in balance group monthly?" I think it goes back to goals, right? But I'll let
Yeah.
I'll let I'll let Emmanuel answer this.
8,000. You give me the first two zeros. Give me the 800. And do the rest.
Yeah.
But yeah, I mean, if that's your salary, you should actually figure out what your monthly expense is. Once you have your monthly expense figured out, so maybe I'll give you a classic how I do it. So, biggest chief of my cost is fuel, right? So once my salary is paid, I want to set aside my fuel, and usually I put my fuel in DigiSave. So if I put my fuel there, once I'm at the pump and I need to pay, I just do withdrawal
Mm.
from DigiSave and I pay, right? So that's one side. So once you figure out your expenses, first is also figure out the type of goals they are trying to achieve and which ones are priority. So if you have a retirement portfolio, I mean, and you have 30 years to retirement, you can figure out that, okay, if I want to save 20% of my salary, maybe out of that 20%, I can put 5% in retirement. I should put maybe 10% in emergency, and then the remaining five, I put it in an investment portfolio, which may have the balance growth. And
Mm.
you can also have your retirement can also have balance growth on there. So your emergency portfolio can ideally be in DigiSafe, for example, so that when you have any emergency, you can quickly fall back on that because you can withdraw at any point in time. And the reason why we say DigiSave and not even treasuries, because treasury bills, you may not be at any point in time, you may not be able to cash out immediately. But
Yeah.
DigiSave gives you that option, right? So those are some of the things. So ideally for an 8,000, if you want to save 20% of that, which is like 400, 20% you're saying 2,000 cities. If you're saving maybe 1,005 of that, then you're setting it aside and you're allocating based on the goals that you are trying to achieve or the sort of investment goals that you have in mind. That will also help you. But first,
Mm.
the important thing is even as you build long-term portfolios, you should have that emergency portfolio, which is very, very
Definitely.
important. And I say it not because I've read it in the books, but because I've experienced it myself.
Mm.
When I started, I was buying a lot of a lot of long-term assets, and I didn't build an emergency portfolio much. Then I needed money to buy something to pay. Actually, I needed money to pay fees, and then at that point, I had to sell off those assets,
Yeah.
those long-term assets, and go into. And I now I've actually started building my emergency portfolio. So those are some
Mm.
of the things. So it's not just from reading, but also from experience. So
Yeah.
you have to build that emergency portfolio. Make sure that it is strong enough. Ideally, they say between 3 to 6 months of
6 months. Yeah.
monthly spend. If you have that set aside, then you're good. You have it in DigiSave. You'll be earning something
Hmm.
on that, and then you are quite good
Yeah.
to go.
Yeah. Some people say that you are one emergency away from losing your entire life
Serious.
savings or investments,
Serious.
right? So it's very important to have
Yeah.
your emergency fund. Let's take this final one from Albert. So Albert is asking the difference between Eurobond trust and enhanced equity, which is global tech, and balance fund. I think let me just give a overview.
Okay.
So Eurobond has a different fund manager that's managed by Sentinel, and that invests in USD denominated assets or securities. Then we have global tech, which we have global tech, which invests in global tech stocks, right? Global tech equities, right? And also Plus Balance Fund. Emmanuel has done justice to that today, right? Emmanuel, would you want to add something?
Yeah.
Yeah.
So I'm not a fund manager for Sentinel, but
Yes.
Eurobond Trust, as the name goes, looks at Eurobonds. So Eurobond is just securities that are issued in a country in a currency that's different from their own currency.
Yeah.
So any instrument issued here that is not in CD, it's an Eurobond, effectively. So Eurobond Trust, what it does is to invest in Eurobonds. The Eurobonds are fixed income, so bonds, as the name goes. So invest targets bond instruments, whether you in USD denomination or other, maybe pound or euro. Those are there. So that's the main focus of the fund. Enhanced equity beta or
That's global
enhanced
tech.
equity beta, global tech focuses
Yeah.
on technology, global technology, equity positions. So that is the main focus of the fund. Plus Balance has a balance of fixed income and then equity. So it is a more diversified form of enhanced equity beta fund because it has some fixed income in there. So that is how different each of them are. You realize that enhanced equity beta is more volatile than in Plus Balance fund, and the swings are much wider than Plus Balance and maybe much wider than Eurobond Trust because Eurobond Trust invests in fixed income. So those are the key differences in those positions.
Amazing. Guys, we've come to the end of our webinar. Thank you so much, Emmanuel, for your time and your insights. Thank you for breaking it
You're
down
welcome.
for us.
You're welcome.
We hope when we call you the next time, you won't charge us for it. Yeah. Anyway, thank
I
you
will
so much.
discuss with my bosses.
Most definitely, most definitely.
Yeah,
Thank you
thanks
to our
so much.
lovely
Yeah.
audience for tuning in. Thank you for asking your questions, engaging, telling us where you're joining in from. We appreciate your time. And yes, if you have any questions, definitely follow us on our social media platforms, Achieved by Petra, on the various platforms. And we hope to see you the next time during our next webinar. It's goodbye from us. Ciao.
Bye-bye.
Bye.
Oh no, my car broke down and the repair costs are way higher than I expected. I need cash right now. I need cash. I can't also wait for payday. And borrowing money takes forever. What do I do? Wait a minute. I've been saving on the Achieve app. I should have some money there. Wow. My DigiSave investment on the Achieve app gained some additional interest. I love this app. With the Achieve app, I can instantly have access to my emergency savings anywhere, anytime. I've been saving little by little, and now I don't have to stress at all. Download the Achieve app today and start building your emergency fund. It's the smartest way to stay prepared for life surprises.
Hi, my fellow investors. Let's make investments exciting this year. In fact, let's make it a challenge. Let's see if you can save and invest up to 100K by December. Open up the Achieve by Petra app, look for 100K with Richie, and join me as we try and invest up to 100K by December because we are all building wealth and we are building it together.
It's beautiful. But how do we make it work?
I know how to make this happen. With a group feature on the Achieve by Petra app, we can invest towards this project.
They dreamed it. They planned it. They achieved it with Achieve by Petra.